It's great to have you here. What a volatile time we saw last week. And of course, we kick off earnings season in the US with the big banks coming in less than 24 hours from this recording. There's a lot going on. And I think with volatility, today's session is all about how do we spot opportunities? How do we, more importantly, manage our risk? And also, what are we seeing in some of the majors right now? My name's Thomas Atkinson. And as always, I'm joined by Tyron Abella. Tyron, what a Friday that was. One of those ones that you probably don't forget about, which usually means it's worth paying attention to.
Yeah, absolutely. It was a wild and rocky road, that's for sure. Welcome, everybody. Look, it's going to be very interesting, isn't it? Like, I know that there's a lot more to play out. I don't like it personally, Tom, when, we know that it sold off because our friend in the administration threatened a tariff and then reversed the tariff because the market fell. He doesn't want the market to fall. It really worries me when the market does react like that on almost just a tweet or a post, and that tells us really all we need to know about the volatility of the market. Of course, we know the market's very, very volatile right now, and when the market's at all-time highs like it has been recently, I think it's very, very sensitive to those sorts of things. So it's going to be an interesting ride. I think earnings is probably coming at a very, very good time for the market. It's probably a really good time for the earnings to take a little bit of the attention away. And let's get back to the nuts and bolts of what's actually making the economy run. Are the earnings good, bad, or indifferent? We can make decisions on that. So I think it's a really, really timely earnings season, I think, given what's happened.
Yeah, I think so. And the point of all of this is, as Tyron's saying, it's, will we continue to see this AI trade play out? And also with the banks, what we get a bit of an idea of is actually leveraged debt. More importantly, whether people are still feeling actually confident. Because obviously, if people are going out and borrowing more money and doing all these types of things, then often that means that growth is also expanding. It's one of the great growth engines. So, Ty, let's get into the charts. I think the volatility that we saw off that tweet last week and obviously everything else that was going on really highlighted a couple of things. One, it's pretty important to have stop losses in the right areas because obviously crypto, which we'll get into, had some pretty wild things going on. And two, that actually some of the, I guess your larger, more liquid pairs didn't suffer the same types of huge movements, particularly the US dollar, which we've got up here, which we'll talk about, and also some of our favorites, gold and silver. So let's talk about the dollar first. The dollar has already, before any of this happens, probably around Tuesday the 7th last week, we already started to see a bit of a rise in it. And what this did was it took out that previous high. And for anyone that isn't aware, we're using here the dollar index with some volume on it. So we can actually see it's the most traded range. And what we were talking about is we can see here rejection, and then suddenly it went above. And in our community and on the shows, the macro show we do, Tyron show on Friday here for Pepperstone, everybody, all the stuff we talk about, this is such an important change. And it happened again before news, before anything else. We saw a flow change, which is kind of pointing at this stage towards 99.80 and these highs over here, Ty. What do you think? Is it more likely than not to get there based on the current flow and technicals?
Yeah, I really like what it's doing, the dollar index. I think that it's doing moving in very even waves, and this little pullback was quite timely. I think we still need a catalyst. I think we want a daily close above that, probably that sort of 99.50. I think if we get a close above 99.50 on a daily chart, that is like a daily candle close above that high there, I think we're really good for another 100 points from there. And I think that could potentially open it up to 101.80, probably as the next very serious resistance. But that spells, of course, a little bit of pain for the euro. Like I think that, we'll look at the euro in a second, but with the momentum, really pushing up. What I also like here, Tom, is that we've got a 2050 cross for the first time in a very, very, very long time on the dollar index. It was going sideways there for a while. It was threatening to cross. It finally crossed. I mean, if we shrink that chart a little bit and see the last time it actually crossed to the
yep. Daily. Yep.
It's quite a long time ago. You see how far you have to go back. And really what caused that? Yeah, you're talking about a 107, 108 price level the last time it crossed. So we've been going sideways for quite some time. Like, there's no question about that. And it's been consolidating here. But I'm glad, in my mind, I don't know about you, Tom, but in my mind, I feel a little bit more comfortable when the dollar has strength in it in terms of what is right with the economy and what's wrong with the economy. I don't like to see a falling dollar and a falling indices. I think I'm a lot more comfortable with the dollar going up, to be honest. I think that gives us a little bit more stability in what we see from a picture standpoint. Because look, let's face it, when we're looking at US earnings, the majority of US earnings are going to be in US dollars. They're US companies, right? So they need the dollar to be strong to keep everything flowing. So when that's steady, I think it steadies out results as well. So I do like to see a stronger dollar. A weaker euro, I don't think anyone's going to be really overly concerned about that. We're not thinking it's going to be Armageddon crash, but I think that it's highly possible that just a little bit more strength in the dollar index, we might see a 114 euro in the blink of an eye.
Yeah, and I think 114 is definitely the kind of corresponding target there to the dollar index. So you can see here, guys, what happened this week was, well, a couple of things. First up, we closed below. We also saw a change here with some really interesting kind of consolidation that was occurring. And I actually want to break this consolidation down just so everyone can see it. So what happened was the market kind of went from a series of higher highs and higher lows, suddenly a low, a lower high, a lower low, a lower high, and it consolidated here. And it actually did a little change of trend in the small time frames. This was actually a very good trade, particularly on Friday the 3rd, if you'd been doing a short type of euro play. But what's happening at the moment is the market's rebalanced itself, trying to get up over the last 24 hours. And what it's done is it's hit this little level of supply. So I think what's currently going on is that the index is actually a lot harder. I feel like what this volatility has shown is, once again, that when you're looking at currencies, when you're looking at certain commodities or metals such as gold and silver, that their liquidity is also reigning supreme in these markets, because you're not getting those kind of massive switches like you'll see in Bitcoin in a minute. That is a whole different story. But the supply here, it hits it, it reacts to it, and it goes down. So it's really something that's actually trending quite well in the smaller time frames, isn't it, Ty? And that's actually not bad technically. And the reason why we're focusing currencies is they've been really technical.
They have. And I think that in times of uncertainty and volatility, when we've got a choice of what we do trade, I mean, look, there are millions of instruments, like yourself, everybody here is obviously, a Pepperstone client. Pepperstone offer so many different instruments to trade. Like there's just basically one for every minute of the day, if you like. So it's no point trading things that aren't moving in a technical manner. So it really is a good idea, especially in volatile times, to gravitate to trading instruments that are being very, very technically sound, because it makes your life a lot easier in not only the prediction of where it may go, but also the entry and the exit. So volatility is good, but you still want to be trading things that are moving and technically sound. It's very, very important. And like I say, we're very lucky with Pepperstone that we've got so many different instruments that we can trade, that there's no real excuse to be trading a bad chart time. I mean, that's what it comes down to, really. There's no excuse to be trading a bad setup for the sake of trading, because with 20 or 30 different time frames and hundreds and hundreds of instruments, you will find something that's quality if you look hard enough. There's no question.
Absolutely. So with the euro, with the currencies against the dollar, we've got that dollar breakout that happened before any of these announcements. It continued through. And then we've got the euro here acting very technically, even just over the last 24 hours, hitting that supply, trading off it, offering some small time frame kind of action as well. And I think the key here in these types of times is also to recognize, where do things change? If this went like this and suddenly went through this high, and all of a sudden it's changing its series of lower highs and lower lows on the way down. So when that happens, you might say, okay, well, now I need to reassess the market. But for now, as Tyron mentioned before, 114 could be a very interesting level. And it does look like euro's weak, dollar's strong. At least that's the current trend on pretty much the currencies across the board. The other one, Ty, has been obviously oil, very tough trading here. But in terms of if you haven't just been short or looking towards shorts, there has been, I think, an interesting slowdown, though, with oil. And the reason I bring this up before we go to the indices is just because, to me, probably the most interesting level moving forward is going to be around that 63. But the market that's going underneath, clearly there's a lot of stops here, went underneath, started rallying, failed to really get through this kind of 63 area, then really got hit, of course, with the news, hasn't rebounded properly. But I think now, Ty, if this goes through 63, that could be very strong. We mentioned in the previous videos we were looking for a 66 plus close. And I think this is another thing with volatility. If you're new here, if you're watching in video replay or any of those things, remember the close is so important, particularly the daily close, the weekly close. These two probably the best two charts that you can look at. The close is locked in time, and often what markets will do is they'll go past the level, then they'll actually reject, and then they'll close somewhere else. And that's where those stop losses and those hunts kind of come in. So what do you think of the 63 level here on oil, Ty? I don't want to spend too much time on it, but I thought that oil is interesting if it gets up there. For now, of course, sure.
Yeah, it's got a bit of work to do to get there, but I agree with you that if it does get past there, it's gonna capture my imagination when it eventually the daily closes above 62.50, because I think then at that point 63.5 is probably a very, very high probability at that point, and then onwards and upwards probably to that 65, 66 level, which is the top of that channel. But right now, it played out beautifully from a technical standpoint. On the 4 hour, 1 hour, daily, take your pick, really. It was technically very, very sound. And despite all the volatility on it, it has actually been pretty easy to trade. And again, you bring up a really good point. If it gets past that 63, all of a sudden, it's trading back inside a very nice channel that has been gravitating from top to bottom really, really fluently and easy to get into. So I like it. Look, I don't mind it at all. I think it's dangerous here because of the levels that we know are fair value for oil. Look, oil does have a fair value, unlike gold that can actually, we'll talk about gold a bit later, but people can pile into gold. It could be a 5,000 and no one would blink an eye because it is actually a safe haven money transfer. Oil is not really that way inclined. Oil has a fair value. There is a price to get it out of the ground and actually supply. So unlike gold, I mean, obviously there's a price for gold as well, but gold is actually a rare commodity that, does fluctuate with actual value of money transfer, where oil is not a money transfer instrument. Oil is actually, there is a fair value for it. Sometimes it trades underneath that fair value, sometimes it trades above it. But what we do know is $60 is extraordinarily important in terms of the cost of getting it out of the ground. So it's a very, very volatile level, the $59, $60 level. It can rebound quite sharply, but in my mind, I would prefer that it was above 60. I think I would rather it back in your 63 to 66 channel, because I think at that it's a safer zone to trade. I don't think there's as much crazy movements in that price zone, but be a little bit careful as it gets into the 50s because it can rebound quite aggressively.
And I think that's the other point. I mean, yes, it's possible to go to 52. Of course, geopolitical tensions and all sorts of things can get it there, and that is a nasty weekly close. But I'd be very cautious here about being a heavy seller because we have seen this level reject quite a few times. Those 50 can get bid. Let's go from there to probably the two major things that everyone's talking about, which obviously US 500 and Bitcoin and crypto and that type of stuff. And then, of course, gold, silver. And US 500 is an interesting one because it fell off really heavily. Of course, we saw the futures market go down to 6,500. And then it rebounded really strongly. Of course, we found out that, we don't even know where really this tariff kind of stuff situation sits. But I think from a technical level, you have to think about it a little bit differently. You just got to say, okay, well, what was I really expecting in a trend up? It had been 117 days since we'd seen a 2% down day in the NASDAQ. That's rare. That doesn't happen very often. So, of course, volatility was around. And I would like to think in this, Ty, is basically people were just getting there was a lot of complacency, and we have seen these tariffs come on and tariffs go off before. So, and the markets didn't even care at one point. So I think it's more of an excuse to see large levels be broken. To me, the interesting points in the future are going to be the 20 weekly moving average, 6,400 zone. This hasn't been touched. If you go back through history, it's a very well-touched zone. It's obviously what we call mean reversion. And then we have the daily 20, which is where we find ourselves at the time of this recording. And this is a tough point, I feel like. I'm kind of, at the moment, from a technical level, a bit, stuck here. Maybe we'll get your thoughts as well, Ty. And the reason is, to me, maybe we're going to hit the 61.8 fib. We're going to find some problems in here. If the bears are going to come back, I feel like this area between 6660, 6700 could be a structural bear zone. But do you think the selling's over yet? That's the question that everyone's asking.
Look, I think, like I said earlier, I reckon there's no better time for an earnings season to steady this market. I think the market was already tentative and concerned prior to the drop. I think the tariffs are a wonderful tool to control the market for the administration. I think they can make it go up and down to suit themselves, which is interesting. And that makes us wary as traders. And I think that what that means, all it doesn't mean we can't trade. It just means that we have to be on high alert that there are important levels that are in play here. All-time highs, obviously, 6,800 is the next likely round number. If it starts to gravitate up there, I would be... I actually think that candle that we've just seen, the big dirty red candle, one of the biggest we've seen in recent time. Is it the biggest we've seen since the administration took over?
No, we had, I think, bigger. I don't know if it was bigger intraday trades point-wise in terms of the futures. The problem is the real market didn't do the same drop. So over here, we got some big kahunas. Like there was this one here that was massive.
Right,
this
okay,
here around the whole Liberation Day. Yeah, so I think it's the biggest since April, but it's basically it's in the top three or something like that.
But I think with that, I think that is a good guide for us in terms of scalping. So if you're looking at scalping and say, all right, I want to trade the US market, damn it, this is what I want to do today, I would set a high and a low above and below that major candle structure and trade inside that, and whatever the market fluctuates to. So, and by that we mean if it's in the smaller time frames, if we start to see higher highs and higher lows, aim for the previous highs. And if it turns around and starts to aim lower and we start to see a series of lower highs and lower lows, I would aim for the bottom of that range. I don't think that we should look for anything too extravagant, because I think that any market volatile drops can be arrested by changing around a couple of percentage points on a tariff, which is scary. But it doesn't mean that we can't trade it. So I think all it means is it just means that we trade a little bit more carefully and look for scalping opportunities rather than long. This is no time to be putting long-term trades in my opinion. I think right now what you want to be doing is looking for those opportunities to get in and out of the market fairly efficiently. And setting a boundary around those two highs on that candle is probably a good start for the S&P.
It looks like this low as well of the day that it gapped open. So obviously on Monday, maybe the 6,600 area. If we do see selling below that, that could force that lower level at 65 as well, Ty. And that's within the range. I looked through history and I looked at similar setups. The general gist is they rally similar to what's happened right now. Then often they will kind of double bottom has been the kind of consistent pattern. That being clear, though, that we don't usually see it. Usually you don't see a sell based on something where you can go like this and it's suddenly fixed. I mean, some do, some are just like, Federal Reserve does this and then it's all going to be okay. But this one's particularly and it's it's kind of gone for the problem's gone for now. So that does make it mean that you need to have those kind of stop losses more in. It's very similar to the NASDAQ as well. Yeah.
And the one thing I will say about these two indices, and this is my personal opinion only, and I'm not sure if Tom feels the same, but right now I think it's probably just as well that the market can be controlled by the narrative that's set by the administration. And by that I mean, if it's falling, they can change a couple of things and put out a couple of tweets and it arrests the fall and it can stabilize. Because I think if the market gets to a level where it starts falling and they can't stop it, then I think we're in for a very, very, very nasty fall. If they can't control it, then I think we're in for, So it's probably, from a trading standpoint, we probably should be thankful that at this stage they've got it on a yo-yo, because I think if that yo-yo string breaks, Thomas, I think that we might see levels that people might be surprised by. So I don't think it's a bad thing necessarily that they can actually stabilize the market with whatever instruments or tools they want to use. So it's not that for traders and investors, it's not a bad thing, right? Like we don't really want to see crazy falls and crazy rises either. We want to see stability to be able to trade it. So while they can control it, I think it's not a bad thing. So as much as we're uncomfortable with the fact that they can change it on a dime, I think it's important that they can right now, because if they lose control of it, and by that I mean, like the COVID era where nobody knew, no one could do anything about it, that's when you see real market Armageddon, and we don't want to see that.
Yeah, I also think another thing that'd be interesting to put here if you are using technical is going to be anchored VWAP, bring anchored VWAP into play and try some of the levels. Another one I just mentioned here is a bit of a wild card has been the DAX. I'll just show you the daily here. The DAX actually broke out almost closed, your all-time high, because it's right on that one, and actually came to the top. So this is come back to an anchored VWAP level I've got here. And it's kind of like in those zones where I think for traders in particular, more so than anyone else, it's like an interesting point. Is the trend up? Yes, it is on pretty much every time frame, except for really low ones. So is this an important point? It certainly was. And we saw that hit quite a few times. We also saw it hit in China. You'll notice here I had this level of 25,000 and just got tapped, and a very good support. So there were opportunities in this flash crash, but I think there were more for people that set alerts. And I think I'd say that as well, is if you're not loving what you're seeing right now, set alerts in your TradingView software with Pepperstone. Set alerts in your MetaTrader 5 or your C-Trader or whatever else. Because if you set alerts, when they go off, you know it's worthwhile paying attention to the screen, and something massive has probably happened for you to potentially take advantage of. The Bitcoin trade as well was really interesting. Now, it depends on which feed you're using. Obviously on this one, so just be careful. There's all sorts of, we won't go into the storylines, but I think with Bitcoin, the key here was what it did, which was that it took out all of these stop loss levels and kind of tapped into, in my opinion, this high level of demand or support, which comes around that 101 to 104,000. And I can see why this was bid up. This was a huge sell. It's just typical crypto, sell 20% out of nowhere, take out liquidity. And another one of these ones where I'd probably be looking at as well, the anchored VWAP on it. The problem is because it's so wicky that even if you put an anchored VWAP here, we'll actually go down lower time frame for a second. 5 minutes. Make sure we actually get it correct. It'll be off. Yeah, it's up the top there. So 1 second. Grab that one. We're gonna. There's a fast move. How fast? This was pure illiquidity. And if you're new to crypto, you might think, oh, this is unusual. No, this has happened so many times a decade. And it always is a period where it shows illiquidity. And that's why you get these huge flash sales and dumps. They're just like chunks. I'll never forget the day, Ty, that I was watching this one crypto. I think it was Dot Live. We were live streaming it. And it went from like $40 or $44 down to about like $18 in a matter of minutes. And it was just like bang, bang, bang. And then just dropped $10 straight away. And we've seen that in the Euro Swiss. I highly suggest, if you haven't looked at these, look at the Aussie. I think it's 1 January period where we had illiquidity. You saw a massive drop there on small time frame a couple of years ago, maybe 5-6 years ago. Then we had the Euro Swiss back in 2014. You know, there's all these, like, have a look at those because they really show similar events, and you can see it is a thing. Now, from the anchored VWAP, what I'm kind of feeling here, Ty, is if the markets do pull back a little bit, I think there's going to be a little bit of FOMO. So markets may come down to like something like 112 here for Bitcoin. Maybe they find some bidding somewhere around there. Again, if they take out the 109 area, you know, get ready, as Ty said, to the potential here of the whole markets across the board, because the S&P would be doing this, to come back down to the levels that they just hit. And that's something that crypto has done. It's often wicked higher, consolidated, trapped in longs, come back down, gone up higher. I don't know if it's going to do it again, though. Nature.
Yeah. So. Look, at the end of the day, I know it was a catalyst for a move, obviously, with the other markets moving. But at the end of the day, that's a head and shoulders that fell, and that would be, at a guess, around the 38.2 if you pull back off that drop right there. So I think and at a role reversal zone to boot. So there's plenty of technicals to say that it might actually trend down from here as well. So I think it's one to watch. I agree. Those levels you talked about, the 112, 19, extraordinarily important levels. If that 19 gets broken, I'll tell you what, look out. You might see some real selling in it. And I think that, but knowing what we know about Bitcoin, it could be back at 123 by Friday. So it's one of those ones where I think you really need to move with the momentum. And look, be cautious and at least understand what illiquidity means, because I know it might be just a term that we throw around and you might say, oh, it doesn't really affect me. If you're trading things that are illiquid and you've got stop losses in place, it will affect you, because illiquidity bounces right through stop loss levels, and your next available price, a lot of people aren't aware of this, but your next available price is the one that you'll get. So if there's a massive gapping event and your stop loss is right in the middle of that gap because there's no liquidity, and you're going to get the first available price, and that might completely throw your risk management out of whack. So it's really good to know. Don't discount we tend now to stick clear of things that we know can be illiquid, don't we, Tom? Like we're very cautious because we know that stop losses aren't as safe as they can be in very liquid markets. Right now, if you're not a currency trader, take a look at some good solid currencies. They're very, very stable at the moment. It's a really good time to trade currencies.
Yeah, I think that's the point today, Ty. The dollar had probably the best technical setup last week, other than some single stocks that we're looking at. That there was basically, it came in Tuesday. Tuesday was a breakout. Euro went very technically. Euro was already pretty live as well, and so was the dollar before that. It's amazing how the market price action foreshadows a lot of this stuff. We've also had incredibly strong trends in like gold and silver. So we'll just have a look here at gold and silver. It probably comes as no surprise to anyone that's watched this show for a long time. We're pretty big gold bulls and silver bulls, or at least I am. And the reason why has been it's been a macro sides thing, but also great technicals. And boy, oh boy, I mean, this thing has just been so aggressive on the uptrend. So it's coming in aggressive. It sells off, hits its first level of demand, finds buyers, actually has some great technical longs in here in the small time frames, which is just in this area. And then right now it's just bulling. Now, a lot of people are going to be chasing this and trying to chase it. I just think it's always worthwhile having in the back of your mind, patience, react, don't predict. And the reason is because, and you'll see here, I've put an anchored VWAP. I'm looking for at least a pullback on gold before I even consider getting in new entries. You might be on a 5-minute chart saying, look at this, I'm buying. But I just feel like that, and if we have a look here at silver as well, they're very aggressive trends, and you can already see, even with this aggressive upward trend, there's still been pullbacks for opportunity. And I think that the anchored VWAP might be, again, a good level for those trades.
Absolutely. I mean, that's the thing. Look, Tom, for all of you who have been following us for a long time, you'd know that, Tom's been a massive gold bull since it was actually at about 2,200, to be honest. Like when it broke the 2,000 for the first time, you were calling 4,000 back then. And a lot of people thought you were a little bit crazy, including me, actually. But like here it is. And realistically, gold is one of those very rare things where it is a safe haven money transfer instrument. I've got to repeat that. No one is going to be surprised if it keeps going to 5,000 without a pullback. It's not like it hasn't got a fair value like other instruments. You've got to be really mindful of that. And it's somewhere where money goes when there's fear in the market. Okay, and it's on one hell of a run right now. And you would be, even though we are expecting pullbacks and we want pullbacks to actually trade, be very, very wary that trying to trade the counter trend to a pullback is a very dangerous game, especially with gold and silver, because their pullbacks are extraordinarily shallow right now. And if you don't get the timing exactly right, you'll get whipsawed very, very badly on the flip side. So trade, I think when you're trading something that's so aggressive in its trend, it's never more important to understand that trend is your friend. The old saying, and only trade in the direction of the trend. Counter trending is fine in stable markets where you've got moderate upside or moderate downside. Counter trending against an extraordinarily efficient movement can be. Its peril is just around the corner, because realistically, if you don't get it exactly right, and I'm talking about the exit, the kickback when it does eventually rise, and it doesn't take very long, will take you out every time. Don't assume because it's going up so quickly that it must come back. It doesn't have to.
That's right. And the RSI, put an RSI on the monthly for gold, and you're going to see how overbought that thing looks on the RSI, which is a great indicator, of course. But it doesn't mean, as Ty said, just go and sell it. Even though previous times RSI has been so aggressive like this, it has eventually had volatility. Those RSI reads were coming $500 an ounce ago. So I think that proves it straight away that you don't want to be doing that. Look, silver. The other thing I want to mention is silver and gold are in squeeze. So silver in particular, there's there's all these little paper contracts and all sorts of things. You can look up silver squeeze if you're interested after this video, and it will kind of show you guys that there is something going on here that is very powerful, and that's what's causing these upturns. So you probably don't want to counter trend these. They're just such an aggressive trend. They're dull when they start sitting, but at the same time, how do you get involved in them? Just remember there are still sell-offs, and when these sell-offs happen, they're still 3-4% down, and they're hitting things like the daily. Look at this 4-hour 20 moving average. Look how good that's been. So imagine if you get an anchored VWAP 4-hour 20 moving average, support level on the smaller time frames, big level pullback, all that type of stuff builds the consolidation. I think that's the type of thing you're looking for. So guys, I guess the general summary here from Ty and I is that the currencies seem to be really good right now from a liquidity standpoint, from a technical standpoint. We're getting good stuff in the metals as well. There's a lot of metals action that seems to be good. In the indices, it seems to be we're stuck in the range. We're not sure in the direction yet, but I think the S&P, those key levels, the big low from last week, the high from last week as well, and the trading in the range bound for the time being as it consolidates. And probably with the crypto side, it's just going to be watch the S&P actually, and I think the crypto is going to react to the S&P's risk on, risk off sentiment. So that's like my summary. Ty, do you have any other points that you think are worthwhile noting?
No, I think you've summed it up very well, but I just think it's a really, really good time to keep your trades, relatively, short in terms of time frame. If you're going for long positions, try and get out quick. And same with the short side, keep them efficient and keep your stop losses absolutely in check, because I think it's a really, really important time to be doing that. Earnings is going to give us a lot more clarity. I actually do look forward to the next 2 weeks when we come back to you and see really where the market's at. I think we're going to have a really different view of where I think the markets are going to be at very different levels. Let's just say that in 2 weeks' time. And I'm not sure whether that's going to be an up or a down, but I think it's going to be not exactly where it is right now. I think there's a chance that we're going to get some decent upside or downside movement from here.
And I think also we'll, when I do the macro next week as well, Ty, Macro Edge here for Pepperstone, I think we'll also have some of those earnings so we can talk about some of those in there, particularly the banks, how the market's reacting. So going to be volatile. We're still at a VIX that's 19. It's still elevated, nowhere near as elevated as it was. The real rarity for VIX, though, remember, is above 25. So really from anything from 0 to usually 15 to 25, that's it's a bit more volatile when it gets up the top. But when it gets past 25, that's when you get that real volatility. And I always say when you're really high up, above 25, that's where you need to focus the most on stop loss and protection. Guys, absolutely. From all of us here at Pepperstone. Oh, yep.
Oh, no, I was going to say that's only a tweet away, so just keep.
Yeah, that's true as well. All right, from everyone here at Pepperstone, thank you so much for watching. Make sure to subscribe down below, and of course, check us out every second week doing these Tactical Tuesdays. And just remember, structure, patience, react, don't predict, and always go with following that flow as much as you can. You'll find that the charts often tell you things before any information comes through. I think the US dollar was an excellent position on that one. Thank you so much, guys. Catch you then.
Thanks, everyone. Bye.